I got a wonderful question from one of my students. IFRS 15 is a hard standard, and the person came to me after a retake, and the problem is to actually understand what the question is about, how to get marks, because there are 5 steps in there, but frankly speaking, when we are reading the question, it's unclear which of the steps is applied. So in here we were supposed to talk about how royalty is going to be recognized, and we were supposed to find 6 marks. Kiki's best-selling range of toys is called Specimen. In 20x6, Color Company, another listed company, entered into a contract for the rights to use Specimen characters and imagery in a monthly comic book. The contract terms state that Color Company must pay Kiki a royalty fee for every issue of the comic book which is sold. So the question could be how revenue is recognized, like what is this very date when we're going to recognize it. But further, it seems that this is not about it. So this is not about step 5. Because later we're told that before signing the contract, Kiki determined that Color Company had a strong credit rating. This is something that is very specific. So we need to ask ourselves, why would we be given this very information? And we have 5 steps. So we know for sure that this is not about the allocation of transaction price. This is not about the transaction price. This is not about defined performance obligations, and maybe it's about revenue recognition, or maybe it's about step 1, identify the contract. If we remember step 1, we remember that there was a provision that consideration needs to be probable. And that strong credit rating, it's actually about the probability of the consideration. So what I would do, I would copy paste it, then I would say this means that at that point the consideration was probable and revenue should be recognized. Then, throughout 20x6, Color Company provided Kiki with monthly sales figures and paid all amounts due in the agreed upon period. This is something that proves the previous point, and that is what we're going to do. So we would copy paste this part, and we would say that this further proves that the company was right to recognize revenue as the consideration was indeed probable.
Oh my, this SBR Made Easy podcast is fantastic because it's not just about the theory, it is about the application. And if that is what you get for free, just imagine how fantastic the course is. Enroll to pass the upcoming session. Let's continue watching.
At the beginning of 20x7, Color Company experienced cash flow problems. This is another bit of information. So with this bit of information, we're going to say what is going to change. So if there are cash flow problems, this means that according to IFRS 9, loss allowance will need to be recalculated. So this previous revenues won't be reversed. However, loss allowance would be recalculated according to IFRS 9. Okay, these were expected to be short-term. Okay, if they're expected to be short-term, how does it relate to our royalty fee? So let's talk about it. We don't know, but we can think about it. So we can say that if Kiki determines that further consideration is still probable, then it should keep recognizing revenue. Color Company made nominal payments to Kiki in relation to comic book sales for the first half of the year. At the beginning of July, Color Company lost access to credit facilities and several major customers. So what does it mean? It means that after that point, consideration won't be probable. So this means that after that point, the consideration is no longer probable, so no revenue will be recognized for further dispatches. In this very case, we have an intangible asset, so we don't give them anything, so we don't lose anything. If in this very question we would have some, let's say, materials that we send, some goods that we send, then the entry would be credit inventory, debit expense. Not cost of sales, because there is no sale, there is no revenue, but rather are the expenses. But in this case, we just don't recognize any revenue, any accounts receivable. Color Company continued to sell Scarimon comic outline and through specialist retailers but made no further payments to Kiki Company. Okay.
Have you made sure that you subscribe to this channel? Do it now.
Let's see how many marks we have gained. Well, we can see that we made 1, 2, 3, 4, 5 ideas. And this means that theoretically we got 5 marks out of 6. And here I would apply 75% rule. So I see that it is more than 75% of the mark that is allocated to this part. And if I don't see any clues in this scenario, I would say, okay, I will go next because I'm limited in time and I better score marks where I'm more sure to score them. If I would have time, or if marks that are allocated would be higher than 6, I would think about what is that in the scenario that I have not used. So for example, Color Company continued to sell Scarimon comics online but made no further payments. I already said that revenue won't be recognized, but I could have said that if they pay, then only then revenue will be recognized. I could also think about whether I get a mark from some theory, and maybe I would get a mark for listing the provisions of step 1 of revenue recognition. But that is if the 75% rule is not applied, and that is if I have extra time. And this is an example how we challenge the scenario. So just go step by step, sentence by sentence, and you are going to score marks.